Hi, good afternoon, everyone. My name is Nicole from the Institute of Banking and Finance, and I'm delighted that you're able to join us this afternoon for this IBF Masterclass, jointly organized with Momenta on ESG conversation capabilities with private clients for wealth managers. We are glad to have with us today Carl Tong, Group Managing Director at Momenta Group, Sylvia Chen, Senior Sustainable Officer, ESG Research and Engagement at Amundi, Cedric, Head of ESG and Climate for Southeast Asia at MSCI, Arjan Diboa, Head of Markets, Investments and Structuring Asia at Indosuez Wealth Management. Before I get the panel to share with us the exciting topic today, for those that are unfamiliar with IBF, allow me to do a very brief intro on IBF and the resources we have to help professionals in the financial industry. IBF was established by MES in 1974 as a training provider to provide functional training for the financial industry. Since then, our role has evolved into one of standard setting for financial services sector skills and competencies. In August 2018, our mandate was expanded to cover career advisory and job matching functions for the financial services sector. We were also appointed as the Jobs Development Partner for the financial services sector by the Jobs Development Council and oversee both skills and jobs development in the financial industry in Singapore. Here's a quick look at our services and how we support the industry across training, recruitment, and workforce transformation. You can find out more about our services and connect with us in any of these areas via our website. The enhanced course fee subsidies, which are part of MES's support package to encourage companies to send their employees for training and upscaling, will continue to be in place this year. Training cost subsidies under IBF STS will be at 70% for trainees below the age of 40, while remaining at 90% for trainees above the age of 40. Training cost subsidies for IBF STS programs will be at 50% for trainees below the age of 40, while remaining at 90% for trainees above the age of 40. You can find these new details on the enhanced training support on the IBF website. You can also find a list of eligible training programs on the IBF Program Finder on our website. IBF has been supplementing the commercial training available with free webinars such as this to support the training needs of the industry. Financial professionals can also tap on the Learn at IBF mobile learning app for bite-sized learning at their own leisure. All these are complimentary and are quoted with CPTL. And that concludes my short intro. I'm going to hand the time over to Carl to take you through along with the exciting panel. Over to you, Carl.
Thank you very much. Thank you. Good afternoon, everyone. My name is Carl. I'll be moderating and facilitating our conversations today. We have up to 90 minutes, so it's 3 o'clock, 3:03 right now. We'll have up to 4:30 for this brief, hopefully informative and useful and practical dialogue that we'll be having with 3 industry experts. ESG, I think if you Googled ESG, and even if you Googled ESG Singapore, you're going to get a lot of different kinds of information, a lot of different kinds of hits. So perhaps I can introduce our conversation today with 3 big, broad stroke questions. ESG is exciting. At the same time, some things it's necessary, but it can be very confusing. Who exactly defines what E, what S, what G is? That's really the first bucket. It's exciting, it's confusing, it's necessary, but who defines it? How do we kind of wrap our hands around this? That would be the first bucket. The second bucket is ESG is an opportunity, but some things ESG is a threat. What we do know is, regardless of which side of the fence do you sit on, the fact is ESG is not going to go away soon. It's not a trend. It is happening. It has happened, and it will continue to be a very important part of our not just financial conversation, cultural conversation, political conversation, social conversation. So it's here to stay. That's the second bucket. And the third bucket is really as practitioners in the industry, wealth managers, product specialists, investment consultants, bankers. Exactly what do we make out of this? My clients are beginning to have these questions. I know that my bank, my organizations are holding talks for the clients right now. The client sometimes calls me and say, hey, look, should I invest in ESG? Well, first of all, we know it's not an asset class. We also know it's not a product. So how do I take that conversation forward? What does it mean for me as a banker, as a wealth manager, or a product specialist, investment consultant? And what does it mean for my clients? So these are the three kind of like moving parts here. We're very privileged today to have Sylvia, Cedric, and Arjan as our guest speakers, expert speakers. I would like to invite first Sylvia for you to kind of share a little bit about your background, who you work for, and the specific ESG lens that you look into this space. Sylvia, over to you first, and then I'll invite Cedric and then Arjan also to make a brief introduction. Sylvia, over to you.
Thank you, Carl. Myself, Sylvia Chen, I'm the Senior Sustainable Officer at Amundi. So I'm actually sitting in Singapore with you guys. For me, dedicated area that I looked at is actually in the green bond, social bonds, or sustainability bond space, the GSS bond space. That is obviously have taken a lot of momentum over the past year, especially the social bonds, the social pillar, the projects have actually increased quite a lot, helped partly, assisted partly due to COVID, but also other issues as well, consistency due to inequalities and all that. But besides that, I also look at a lot on the Asia energy transition part of things. So I'm heavily involved in engagements, discussions, as well as in the taxonomy developments for the regions as well. So that's me.
Thank you very much, Sylvia. So Amundi is a manufacturer, is a product manufacturer, and Amundi has taken the whole ESG concept and then have been able to provide manufactured some products, and we're very grateful for Sylvia coming in from that posture, but at the same time kind of participating as a thought leader to help define this space. Cedric, over to you. Perhaps a quick introduction and the lens that you look into the ESG world.
Sure, thanks, Carl, and thanks for the opportunity to speak today. Good afternoon, everyone. So my name is Cedric. I work for MSCI. I recently relocated from London. I'm based here in Singapore, where we are building a sustainability excellence hub for the whole of APAC. My experience has been in sustainability. I've been working in this field for the past 15 years, and I'm now heading our ESG and climate business in South Asia. And really what MSCI does is that we rate and analyze more than 10,000 issuers on the equity side and 15,000, including our fixed income universe, on the ESG and climate characteristics, in the aim really to help investors integrating these issues into their process, but really into helping them supporting their sustainability strategy.
Thank you very much. So again, MSCI, another global, well-recognized industry standard. In fact, you guys define many of the industry standards and benchmarks that we look at. ESG is one of the things that you guys have embraced and become really at the forefront of this, and we're very grateful. So I just want to give our audience, our participants here, some appreciation for the three different lenses that we're looking at. Sylvia, really from a product manufacturing point of view, but she speaks into the global and regional standards. Cedric, which comes from ratings and indexes, that's also helping us define this collective engagement, not just within the banking industry, but also with government and other agencies. And thank you very much, Cedric. Arjan, we welcome you over to our conversation. A little bit about yourself and the very unique lens that you look into this whole world of ESG.
Excellent. Thank you for that introduction, Carl. So my name is Arjan de Boer. I'm head of markets, investments and structuring for Endoswest Wealth Management, which is the global private banking arm of the Crédit Agricole Group. I also, by the way, recently relocated from Hong Kong to Singapore. So I'm one of the many bankers moving here. And what's interesting is indeed, three different speakers with three different backgrounds, but all related to ESG. And I think for us as a private bank, we're really the interface between product developers on one side and the end client on the other side. And I think a number of things are very important in that stage, right? What you usually see in the financial world is that it starts at an institutional level, then it slowly trickles down corporate level, maybe ultra or high net worth, and ultimately it finds its way into the retail landscape. I mean, the use of derivatives in the 90s, I think, is a good example. And I think we're seeing the same now with ESG. So what we have done, I mean, ESG is clearly something that I think, especially, let's say, the last 2-3 years, seems to be the flavor of the day. Not a week goes by or you're invited to a conference or a seminar relating to the topic, which is very, very, very broad, right? It's related, for example, to the United Nations Sustainable Development Goals. If I'm not mistaken, you have 17 of those goals, and they're quite wide. But we, as Crédit Agricole, I mean, in Europe, we're also nicknamed the Green Bank, and that is for a reason. So we take this stuff very serious. To give you an example, we started reporting in our client statements, we started reporting ESG scores at individual security level in 2015. So that's 7 years ago. So I think in that sense, we're quite well ahead of the popularity wave that we're seeing now. And I think there's many aspects we can talk about today, client interest or not, performance in relation to ESG, how do you educate clients, what do they feel about it, how do you approach ESG, et cetera, et cetera. So I think it's going to be a very interesting discussion today.
Thank you, Arjan. Arjan's got a very fascinating approach because at the end of the day, the moment of truth is that 20-minute, 45-minute, 1-hour conversation with the client, right? And your team pulls together the different the recipes from MSCI, perhaps some of the ingredients from Amundi, and that's expressed in client conversations, right? The truth of the matter is client doesn't understand, doesn't agree, and doesn't buy, the engine doesn't move. So thank you very much, Arjan. It's a very critical component of this. So I've got a few questions I've prepared that I would like to ask our panelists. And then there are some questions that we would actually also pick from the audience. So I invite you to start to type questions when you actually are inspired to do so. But let me just first start, and I'll start with Sylvia. According to the BT Amundi ESG investing report, and this is just released 2-3 months ago, specifically Singapore investors, specifically this market, they are very actively engaged with the ESG conversations with their clients. What, from a client perspective, what are the 2, 3, 4 things that the client needs to know about ESG investing, especially since this is not something I can buy, something called ESG, right? So from a client's perspective, what are some of the things that you feel, Sylvia, the client should be looking out for?
Yeah, so the background about this survey is really to find where are we for the retail clients, investor-wise in Singapore, in terms of their attitudes, their preferences toward ESG. So want to get a sense of where they are. So actually, there are quite a few interesting findings that we have found that report. Is actually the first point is on many of the Singapore investors, as you rightly pointed out, they're actually very engaged. Actually, one of the strongest profile that we have identified in the report itself. So it actually showed that it's not just a fad, it's not just a trend for ESG, but actually show genuine interest in getting to know about ESG products and potentially to invest into it. And then the second thing about is the generational shift that we realized from this research is it's really tilted toward the younger generations, be it the Gen Z, the young millennials. They actually show a strong interest in ESG products versus what we conventionally would have thought that it could be the older generations that have placed a stronger focus on ESG. But within the younger generations, what they focus on is on the S pillar for the social causes. So they
Sorry,
actually,
I just want to make sure you're talking about the S part of ESG, right?
yes, so the S part within that ESG components. It could be related to the poverties, related to discriminations, inequality. So it's quite interesting because for the younger generations, the S could be even more important than the E, although a lot of time we're talking about E quite extensively. But that should be the rising attention that should be paid to the S pillar. And lastly, is really what we are trying to do as the sessions today is to do more information sharings to close the gap, because there's a huge gap on the intentions toward the ESG versus what they actually do with ESG and what's available for them to apply that ESG, what they want to do to really drive any causes. So I think information sharing like today is quite critical to help to bridge that gap and to create really a positive catalyst to drive more actions within the ESG space.
Sylvia, I just want to make sure I'm just going to quickly summarize. Thank you for that sharing. But what you're basically saying is Singapore, interestingly, is really ahead from a consumer point of view to take an interest in this topic. And then a subset of that is it seems like the younger investors are having a little bit more kind of a vested interest in these topics. And then within that subset, under the E, S, and G, the S with the younger investors are much more pronounced. Is that correct?
That's correct, Carl.
Can I just ask a very blunt question? Is this a luxury to be interested in ESG as a topic and S? Because Singapore is quite an affluent society. Is this a luxury, or you're seeing this trend regardless of the economic status throughout the world here? Is this something that's a nice to have instead of a need to talk about?
That's definitely an interesting question. I think not just for Singapore, I think many regions probably have that ideas, whether it's a good to have or it's a must to have. For us, I think it's really part of everything that we looked at in terms of product development, in terms of investment decisions. It's integrated into the whole process and decision making of the whole investments. And it's not just for, I think that banks or FI, it's really goes down to people like daily, because when you mention about social, even if you, on average, on surface, it looks generally people are quite affluent in Singapore, but in reality, when you look at what happened during COVID, especially the early times, there are still certain groups of people be disadvantaged in certain conditions. Could be the medical helpers, workers, those foreign workers as well. I think during certain times, there are still targeted populations, which is actually the key criteria within the social, when we especially look at social projects. What is the targeted populations that is we're trying to help? So it may not be the mass population, you're right, but within certain targeted groups, that is definitely require additional helps. And that's where that social pillar would also focus on. That's in terms of the target population in that context.
Sure. And Sylvia, there's something you just mentioned just now is quite important, I think, to highlight. As Amundi, as an organization, I'm not trying to sell you guys, but the fact is you've taken the ESG and it's no longer just a department or a sector. You're taking that whole thing and injecting it into your DNA and how you develop and how you look at everything. Is that correct? Yeah. It's just part and parcel of the daily bread now, right?
Yeah. So for us, it's not a good to have. It's really part of everything we do already.
It's a need to have. Thank you.
Yeah.
Over to Cedric then. Cedric, for the industry and the overall broad stroke ESG, there are, of course, we're reading it now, greenwashing and all these other stuff. What are some of the green and the red flags to be identified and me as an individual, if I've got $100, $1,000, $100,000, $1 million to invest in, what are some of the things I should be looking out for so that I'm not pulled a fast one? Cedric, from your lens, what are your thoughts there?
Sure. So obviously we are a data and research provider, and so we really support investors, right, in order to take an informed decision. So we're not here to. I'm not here to provide any investment advice, right? That's something I need to say. Otherwise, I'm going to have some issue with my legal department, which is quite important.
Yes.
So again, we come down, I think, to what is ESG, and it means a lot of different things. And so that's where I think that question on luxury, right? Is ESG a luxury, is also a good one. And then hopefully that will also help understanding why it's not. But so it means a lot of different things, right? And that's so evolved over time, right? So it started probably 30, 40 years ago, more on the values side. If you think of sin stocks, if you think of like, I don't want to invest in specific activities, right? It then moved over to value. So seeing ESG as a risks, how issuers are being impacted by ESG risks, such as water stress, such as privacy and data security, corporate governance, and therefore how that impacts the performance of these issuers. And nowadays we even talk about impact. So it's kind of the contrary, but it's trying to understand how issuers are then impacting the environment and society. So it can mean a lot of different things. And yeah, again, right, depending on your strategy, of your objectives, of your preference, you may want to look at different characteristics and different aspects. So you may want to look at the laggards. And here you may want to look at things like, are these issuers investing into brown activities, right? So nowadays that's basically defined as companies involved in the fossil fuel industry, for instance. You may want to look actually at something slightly different in addition, or into things like human rights issues, into environmental controversies, something that is a bit more reputational in a way. Or you may want to look into, again, ESG risks, right? How are these issuers exposed to these risks, and they are managing these risks actually less well than some of their peers. So again, that's how you can identify maybe some of the laggards. But on the other side, right, and if I mention risks, there's also opportunities. So you may want to identify the ones that may well be better positioned to leverage opportunities down the line, right? So that's why you may want to look at whether they have set targets to cap emissions, whether these targets are stringent enough, whether they disclose some types of timelines, whether these issuers are so well aligned for a 2-degree world, so using something like an implied temperature rise. But you may also want to look at actually how do they already operate and generate revenue from positive activities like energy efficiency activities, renewable energy, sorry. And then finally, there's obviously, I need to say it because I'm sure at some point we will mention it during this call, but the UN SDGs, the UN Sustainable Development Goals, right, which are also another way to look at, okay, how are these issuers in a given portfolio aligned with these principles that have been enacted by the UN. And so again, right, depending on your preference, your objectives, you may look at these different characteristics. But to go back into that original question that you asked, Sylvia, which I think is important, is ESG a luxury? Well, to some aspects it may be, again, depending on the objective and preference. But at the end of the day, there are some characteristics that are still risks. And I think the typical example is climate change, right? And I think that's why also it resonates not just in Singapore, but also across all the investor base across the whole APAC region, the whole Asian Pacific regions. It's because everyone will be impacted by this kind of risks, right? So there's not a luxury. These needs to be taken into account into the investment process.
So Cedric, I made some notes as you're speaking. I'm just going to quickly recap. I love the way you put it, almost in three specific. But so companies in the past started out many, many years ago on this is the things that we want to avoid. And then they moved to these are the things that we need to manage our risk. And now you're talking about these are the things that we need to do to make positive impact. So there's a little bit of this maturity in this journey. This maturity, there's an overlay by the UNSDP, the United Nations framework that does that. So the question then is just a simple question. Have we enough of a track record to see that there is impact? Or is this just hopeful?
So
I'm asking you a very blunt question here. Sorry.
No, it's a good question. And so again, there's two answers to this, right? And I'm afraid they're not, straightforward answers. So the first one is obviously ESG is relatively new, right? If you compare it to credit research, credit rating, etc., that's been there for hundreds of years. It's all based on financial data, and it's all being assessed on the same type of analysis, right? Are companies being able to repay that debt, right? And I'm really summarizing in a nutshell. Again, the reality is ESG is something that is still fairly new. It's a few decades old. It's across a lot of different topics. These topics really evolved, right? Like if you look at privacy and data security for the hotel or airline industry, that wasn't an issue even just 10 years ago, right? So that's the challenges of just assessing companies on ESG. And then going back to your question is another question is, what is impact? Is it impact as a financial performance? Is it impact in terms of doing good? And again, we can define what is good, right? But again, right, so the way I think it's important, and I think that's where the regulators, but also where I see players such as Arjan or Sylvia playing a big part, right, is the way they do this is like they're a lot more transparent with their clients, they're a lot more engaged with their clients, and they're helping that discussions to really define with their clients what is their objectives and what do they want, right? And again, greater understanding and greater clarity.
Thank you. So thank you so much, Cedric. And Arjun, I'm going to move to you now, and I'm going to just pile up what was being shared, right? There's a groundswell, Sylvia said, certain sectors of the groundswell, like the young general interest in social, but there's a big groundswell. There are companies who's trying to do all these different things, and there's different companies with different maturity journeys. Arjun, I'm going to, as there was a famous movie, Tom Cruise, Show Me the Money. Arjun, as an investor, if I use ESG as an approach to investing, I'm just going to ask the question that I think the 120 people participating wants to ask. Can I really make more money? Is it a better way to invest? What do you recommend to your clients? Is there a sacrifice? An ESG product, but maybe 5% versus a non-ESG product, 8%. You know what? I'm from Indonesia. Maybe I'll take that additional risk. What are your thoughts about financial performance, investment, and the kind of advice you work with existing clients, because you're doing this as we speak right now, working with clients. What kind of conversations are happening there when it comes to performance?
Actually, that's a very good question, and I think the skepticism around performance has for a long time been the biggest break on the breakthrough of ESG, for sure. So many investors, across the entire spectrum of investors, were very skeptical about, okay, if I do that, then I am.
Am I sacrificing performance, right?
Exactly,
Basically.
exactly.
Yeah.
So now, obviously, Amundi being our sister company, they help us a lot with research, and we can see, if I'm not mistaken, it was give or take from 2014 onwards, but we can clearly see, by the way, you also see it on the MSCI ESG index, that ESG investments in general now generate better returns.
Oh, wow.
Those with low ESG. Let me give you an example. I think it was, if I'm not mistaken, give or take 2 years back, that 6 very large institutional investors wrote an open and representing literally trillions of investments, large pension funds, and they wrote an open letter to fast food chains on how they were going to clean up their supply chain. And obviously, so this was all in the public sphere. So, as a company, let's say you're a large hamburger chain, right? As a company, you need to start taking that really serious, because if you do not tackle that issue, then by default, people will no longer invest in your stock and you will suffer. So, the fact that so much money globally, especially on the institutional side, is involved. So I would say by default, if you do not do the right thing, these investors will leave you, also because of the mandates that have now been given, which are more and more ESG focused. So supply and demand clearly is more and more in favor of ESG products and those securities with high ESG credentials, let me put it that way. Then just going back on something you mentioned earlier, it's not that the clients ask the same questions. I was a little bit surprised in a positive way, actually, but that Sylvia mentioned that the S is becoming that important, because most of the questions we get are all about E, environment, green, plastic, stuff like that. And I would say you need to be a bit further into the ESG story before you move into the S, and even more before you move into the G part of this. But we clearly see, especially the younger generation, taking real interest in this for ideological purposes. They really want to invest and do the right thing from an investment point of view and influence those companies and whatever they invest in. I would say the more senior generation now starts waking up to ESG, but less for ideological reasons, more because they start finding out that the financial results of investing in this stuff is actually better. So in all fairness, they're less interested from an ideological point of view. That's more really the younger generation. And maybe a final remark, because you mentioned Singapore, high interest, and a very affluent country. I think that plays a role as well. I mean, Europe, I think, and to a certain extent, North America has always been quite ahead. Asia is picking up. But let's be honest, in places like Bangladesh, I don't think investors, they have lots of other things to worry about. So they're further behind in that journey.
Thank you. You mentioned so this thing that you talked about, the example, I think it was a very easy to understand example, like the hamburger chain. If you're not doing the right things, you're going to attract less investors. Less investors means your profit. So that's actually, there's a circular kind of a means to an end. If you don't do it right, basically you're going to get hit. And it's very clear now, Arjun, that you say that the data, there's measurable data over a past 8-10 years when you started to measure, to say that ESG friendly organizations tend to have good returns, perhaps even better returns. The E part, environment you've highlighted is very interesting. Can I ask about the G part? I'm just wondering, is there, and I'll throw this out to yourself first, Arjun, and then maybe I'll invite Sylvia and Cedric to talk. Is the G part more related to the countries that are a little bit more relaxed? I won't be shy about it. China, right? We've all had, the company, I think, Luckin Company, coffee. There are other countries that may not have as strong regulatory maturity and control. Arjun, what are your thoughts about the G part? Is that a little bit more geared towards certain countries or geographic regions or industries? What are your thoughts?
First of all, I would think so. I mean, governance, to a large extent, also has to do with transparency. And I think, so obviously, and even I think now, if you mentioned China, right? I think even for reasons of the current zero COVID policy makes this more difficult, because you cannot do an on-site audit to check these ESG related things. So I think that puts a little bit of brake on, but that's hopefully a temporary brake, obviously. But yeah, I think, look, different countries or different regions are at different stages. I guess the good news is that there's still lots of work ahead. I'm of the belief in general that this whole ESG is not a trend, it's here to stay, but we're only just at the beginning, because like I said, it's so wide. We have 17, if I'm not mistaken, sustainable development goals. There's so much. I mean, we do very regular sessions, and we are very lucky to have Amundi help us with what we call the ESG Academy, training first and foremost our own staff before we can then in turn talk to our clients. And a different, we can have a separate session on electronic vehicles. We can have a separate session on the circular economy. And I can go on and on and on. We can have different sessions every single week for years ahead. So this is a very, very big thing. But yeah, as you rightfully mentioned, I think different countries or regions are at different stages.
Thank you. I mean, and I'll switch to Sylvia. I just want to stick on the governance side, is because it just occurred to me, if you look at the global capitals market, and let's just talk about the public market right now, not the private companies, which has another set of ESG considerations. But let's just talk about, we have the banking industry, we have wealth managers, private bankers, investment advisors, external asset managers, family offices calling in today, right? So the US market is about 45% of the global capital market. And we would think that because it's more mature, governance and transparency, it still has its problems, but it's a little bit ahead. But if you look at China, Hong Kong, combined these two, they're about 15-16% of the global capitals market. Plus India, I'm from Indonesia. So Sylvia, from when you develop products, and you guys have many great products, and you look at products that are much more, because there are different themes, right? You have technology funds, you have S&P 500 index funds, you have geographic region funds. How do you look at the ESG components, and how do you weigh them when you actually construct products? Is that a part? I mean, I just want to understand. Is there an E fund? Is there an S fund? Is there a G fund? Or you kind of mix and match into a product?
So in ESG product, in terms of development, in terms of strategies, we are seeing a trend to move away from exclusions, from screening that used to be quite widely adopted. It's still the case, but I think we're seeing a trend to move toward more of an impact, I think, in terms of thematic. So more specific on what is the positive or negative impact that certain products or company have on the society at large, and how is that being measured, how is that being tracked, as well as how is that being reported. And that's why the data part also comes quite importantly, the disclosure part of things, which also tie into the governance side of things, because how much is being disclosed also very much decided at the board level, at the senior management level, and how is that being conveyed to the general public. Definitely quite critical. So if you refer back a lot of time on the risk avoidance mitigation basis, exclusion screening is helpful in a sense that it's a lot of time based on normative, international sort of commonly accepted principles. And then we develop this sector specific, a lot of time tobacco, those controversial sectors. And then now it's focusing on what is the trend that can really help to drive certain parts, and really specific, like thematic, like RJ mentioned about circular economy. Where are we in terms of biodiversity? Those are really specific right now, and we're seeing a lot of trends on measuring that impacts and reporting that impacts.
So it's almost like I'm just going to quickly summarize. It's shifting from let's try to avoid polluting the ocean and killing, animals, to instead of doing that, shifting it a little bit towards what is our business activities going to positively impact a certain biodiversity, a certain theme, a certain population group. So it's like do good instead of let's not do bad. Sylvia, is that right?
I guess in a way you're right. So instead of just talking about not avoiding coal, like let's divest from coal, but what else are you doing on green energy that is on top of that? What additional things are you doing that would help to drive the positive impacts ultimately?
So taking what Sylvia just said, I'm going to go to Cedric now. So if the company we're talking about is Shell or Exxon, right, or one of those big coal companies, would they score high on an ESG rating?
So the way we look at ESG rating is slightly different. It's sector specific. I think similar to MSCI in terms of you rate a certain company within that sector. So you rate Shell within that oil and gas or energy. So not necessarily the whole ONG is being excluded just because it has involving a lot of controversials. But we still look at each criteria and company specific and compare that against the peers. So we don't do a broad stroke say no to ONG per se.
Got it. Cedric, how about yourself?
Sure, and I can complement, right? So Sylvia put in quite well, and then I think in terms of the trends of what we're seeing, and I think climate and coal is a good example, right? So it started with divestments, divesting from kind of the worst, which is like companies that are still involved in coal, right? And by the way, this is also because the IPCC is calling for basically any new coal project to be stopped in order to meet a net zero. So that's why a lot of the investment community was focusing on this. But then the next question is like, what's next, right? And the whole point is obviously to look at the transition towards a low carbon economy. And so that's where you need to also focus on, okay, what are the companies operating in that sector, because at the end, people still need energy, they still need electricity. So who are the ones in these sectors that are the best position to leverage opportunities in a low carbon economy, right? And so that's why, again, you're looking at the types of targets, but obviously, again, the types of solutions that they're investing into in terms of R&D, but also the existing solutions that they already have running and generating revenue from. So and to complete your previous question as well, and that's a good example here, right? So it's I think the question of avoiding bad is still there, right? I think it's still important, but on top of it is also having a view at how it's positively impacting the environment and society. So there's that extra layer that is being added recently and asked by investors generally.
Thank you.
Actually, Carl, can I?
Yes.
Because I'm looking at the questions, I see a very interesting question by William Go on
Yes.
on the Q&A, and I think that question touches upon something which I think will be crucial for ESG in the years to come. So
Arjun, I'm just going to read out the question so everybody knows. What is required to professionally qualify for giving ESG consulting services? Go ahead, Arjun.
Right. So basically, I think the answer is at this moment, nothing. And maybe Sylvia can correct me if I'm wrong, right? I speak a lot on panels like this with regards to this topic. I think I know a fair bit about it. There's still much more to learn, but I don't have specific ESG
training, right?
or right. I mean, yes, I follow training, but I don't have any specific. I mean, I have a master's degree in business economics. I even have a bachelor's degree in hospitality, but I do not have any specific degree in ESG. There are no. I mean, if you look at accounting, whether your books are being accounted by PwC or KPMG or one of the big four, the outcome should be the same because there's generally accepted accounting principles. We do not yet have generally accepted ESG principles, and that would be
not a unified one the whole world agreed to yet. Not yet.
Right. So all the way in the beginning, I mentioned that we show ESG scores in our client statements. Amundi is helping us with these scores, and I know that Amundi in turn, I think, works with 6 to 8 other external companies purely because of this, to make sure that the scores are, as much the real scores as possible, because simply there's not one specific authority on this topic.
Thank you. Well, I mean, Arjun, I want to stay on this moment, on this topic for just a moment. So, okay, a lot of what we're talking about are concepts who have been taken into products and into the processes. But coming back to Arjun, you work a lot with private clients. What are the skill sets that a wealth manager, a private banker, may need to have in order to engage appropriately with clients, right? Well, what are two or three things that are capabilities, apart from coming to these seminars, which is what we're trying to do now? What are some skill sets, whether it's technical skills or soft skills? I think 3 years ago, maybe mindset was the issue, but I think we all addressed it. ESG is a hot thing. It's the thing right now. Mindset is no longer an issue, but mindset, technical skills, and soft skills. Arjun, what are some of the things that you would like private bankers to embrace from a skill set point of view, so that they can engage with the clients in the right kind of?
Well, I think in order to, regulators around the world are starting to wake up around this topic, including in Singapore and Hong Kong. If you look at the new regulations that came out not too long ago in Europe, I think they go furthest. If I look at MiFID, very specific with regards to reporting, how funds report against greenwashing, et cetera, et cetera. And so education, I think, is so, and we've only just started. I mentioned ESG Academy that Amundi is facilitating for us. That I would like to see regulators, and IBF, by the way, could play a very important role in that. I am new or a renewer, because I've been in Singapore before, but I now have to do my CACS diplomas, right? So I'm studying for that as we speak. I think it would be really good to start with a regulatory requirement to have something with regards to ESG. So all people that in client-facing financial roles in retail or in private banking should have a basic understanding of ESG. I think that would be a very important step ahead. And naturally, for product providers and developers, we could have the same. So I think that would be an important next step from a regulatory point of view, to embed it further and further. And subsequently, then we are, as I mentioned also in the beginning, the interface to the client.
Thank you. Thank you very much. I agree. And actually, at the end of this seminar, we're going to actually offer for people who want to participate an online mobile education program that IBF has approved on ESG. So please stay on for that, everyone. You will have a chance to participate in that. I want to switch over to Cedric a little bit. Cedric, let me just, again, I'm trying to come from a private banker, wealth manager point of view. This is one of those things that if I don't talk about it, I'm left out. But if I talk about it, I may not be ready, or the client may not be ready, or even my organization may not be ready. I'll give you a very simple example. I think Arjun says some of our, in Europe, some clients can go down to the level of detail of the portfolio, the ESG index, but most banks, their portfolios has basically, here's your asset class, here's the investments you've made, the mutual funds, here's the structured note that you have. This is your equities, bonds, and your cash components. Most banks are not even ready. Well, what are some of the things that you feel, Cedric, that needs to get us ready from an organizational point of view, and even as an individual practitioner point of view? Because this is a lot of discussion right now, but how do I activate that? What is the readiness that's necessary?
Sure. So there's again various levels, right? So we were just talking about certification, and that could be in one way. And then, by the way, I saw one answer to the question was indeed, so you've got the CFA that has now a certification on sustainability. You've got also a number of big UK-based schools that are doing some sustainability programs. So there's programs like that can help to get that basic understanding. After, I find you asking a good question. So I don't know if I'm like the best person to answer, and maybe I'll invite Arjan, but also Sylvia to comment, please, on my answer. But from what we're hearing from our clients, and by the way, right, we're working with all types of investors, from buy sides, but banks, private banks, etc. Right. So, but from what we're hearing from our clients, is that it's always better to be at the front foot and to already engage with the clients on these kind of topics, especially that nowadays, pun intended, in a way, these are hot topics. They're always in the press. So it's always better to engage with your clients on these kind of topics, starting at least from the top. What is ESG? Looking at, okay, what is the carbon emissions, things simple and easy to understand. And then from there, you can start to engage your client, right? And I think this is important just because, as the Amundi BT report is showing, first, new generation are interested into this topic. So there's an aspect of like potentially winning business. I had some interesting feedback from one of my ex wealth manager clients in the UK, SAX, because I was previously based in the UK. They're still a client, rest assured. But that actually, for them, the best engagement they had was not with the younger generation, but actually with the oldest, because the oldest was actually thinking about the fact that they were managing money for their grandchildren, and so therefore they were caring a lot about these issues.
So it's about stewardship. It's a little bit about stewardship.
Exactly right. But again, right. So there's an aspect of therefore winning business, right? And then let's not forget, we talked about the regulation, and so I talked about the carrot, but there's obviously the stick, right? In a way, where if you see what's happening in Europe, and in Europe you cannot maybe think that's foreseeing what may happen here in the region, and in a way there's signs of that. But if you think of what's happening in Europe with the regulation, there's MiFID II, for instance, that is now being applied, basically asking investors to engage with their client and to make sure that they discuss their ESG preference and their risk profile before selling any product. And by the way, again, right, we may see some of the first signs here in the region of this kind of regulation with the recent MAS regulation on ESG retail funds. So there's also, again, the stick there with the regulation. We basically, well, in a way, force investors to start engaging with their clients. So again, all to say that basically, I think it's better to start now rather than to wait, because that might be a disadvantage overall and be a cost at the end, right? But again, I'll invite Arjan and Sylvia to comment on what I said.
So the answer is don't be late, be early, right? But Sylvia, let's just say that I'm a bank, or I am a platform, and I say, great, I'd love to get some ESG products. Can you give me some? But I think I'm going to face a challenge, Sylvia, and I'll be very open about this. My client's existing $100 is invested. Out of $100 invested, and they don't have much cash. So I'm going to bring a new product in from you, which is got an ESG stamp on it. And we know it's good because we trust your data and all that. What do? Do I rebalance the portfolio, sell out? What's the practical thing that I do as a wealth manager? I mean, the ideal way as a wealth manager is tell my clients, the $100 that you have with me right now, thank you, let's keep it, stay invested, it's for the long term. We like what we're doing right now, maybe a little bit of rebalancing. Can you give me a $50 more, right? And then we'll buy Amundi's product with that 50. That would be the ideal way. But in many cases, that's not the situation. I'm working with an existing pool of $100. What are your thoughts about how to rebalance that to be
Right.
more ESG friendly for my client's portfolio? Any thoughts?
So there's actually a great initiative going on within the asset management space. A lot of the asset managers, including ourselves at Mundi, we joined the Net Zero Asset Manager initiatives and this alliance, which means we are trying to rebalance our portfolios, our asset under management, move toward that net zero portfolio ideas. So to your questions, how do we rebalance within the assets that we have and move that to that net zero goal? And you may also have questions on actually what's the definition of net zero. So
Exactly. And how fast should I get there? Next week or in 3 years' time? I mean, can you shed some light to that?
Yeah, so net zero, the concept is actually is measured on a net basis. Of course, whatever you emitted is being netted off somewhere else. So on the net basis, there's no additional emissions being released, and from the portfolio level, it's similar approaches. But I guess there's been people mentioned about the comments on then it's easy for asset manager to rebalance in the wrong way. What does that mean? So they will rebalance by selling all the hard to abate sectors, the sector that have a highest emitter at the current rate. So right after they sell off those positions, actually their portfolio already better off because all those high emitters are no longer existed in their portfolios, but actually they're sold to other people. So the real world problem, it doesn't get solved. So the way to do it is actually look at the data, of course, look at the companies, those investees. If they are the quitters, I wouldn't say laggards or the losers, but actually the quitter that they don't even care about ESG, they're not even doing anything on ESGs, then avoid them, of course, because they will not improve over time. They will not be supporting that ESG journey or net zero initiative down the road. But who are the improvers and who are the winners in the space, and continue to gradually rebalance, tilted toward those companies. But of course, then other investment strategy comes into play, such as engagement, such as voting. The whole stewardship need to come into play because it doesn't happen within one night or one day. So it takes time for the whole portfolio to rebalance.
So maybe this is an unfair question, and I know it is, but I'm just going to ask it because I'm thinking about myself here, Sylvia. So I have no idea what my portfolio looks like right now from an ESG point of view. I know it's negative because the whole world stock market's negative right now. So I may not want to do anything, but
right.
What is my personal timeline? Should I try to get into net zero portfolio, which is considered good, in 3 years' time, in 5 years' time, or like we say in Chinese, over time? What is a good aspirational kind of like a timeline?
So it's interesting because then depending on the sector your portfolio is in, we have this SBTI, definitely Paris Agreement aligned, those objectives that's on a high level that we're trying to be aligned with. So we are trying to achieve really well below 1.5, well below 2 or even 1.5 degrees of increase in temperature level by no longer than 2050. And that's, of course, 2050 sounds long, but actually to get there, we need to set interim and short-term targets to get there. SBTI focus on 2030, a lot of time on the roadmaps and the targets. And you can mention about the UN SDG, the 17 goals is also a 2030 targets. So these could be the targets.
Those are global targets, right?
Those are global targets, yes.
Yeah. And
but they separate. So from top, then it's top to bottom. What does each company within that sector have to do to achieve that? There's sectorial pathway you have to follow to adopt so everyone, all companies would ultimately achieve there.
Got it. So I'm going to turn this to Arjun now. I'm a client, Mr. Banker. All right. I've got 100,000. Sylvia just gave me the overall global goals. Where do I start, right? Let's just say I'm 75-year-old, like what Cedric just said, the older generation, they want stewardship. And let's just say I'm 75-year-old. I want to pass some of this money that I have, hard-earned money, and they're all invested in products that you guys have told me to buy over the years. Some discretionary mandates, some good stuff, and some has made money, some has lost, mostly lost right now because the capital market is so kind of choppy. But my granddaughter just graduated in environmental law. She's and this is the generation we're living in, right? The 20, 23, 24-year-old, as you guys said, they're very committed. You know, she criticizes the restaurant when we go in there and the restaurant gives straws. I'm just giving some examples, okay? She's just wondering why she only wants to go to restaurants that's got farm to table with, you know, a lot of organic stuff. And she is insistent that, you know, granddad, you know, if you're going to give me a bunch of, and she can make her own money, by the way, because she's a lawyer. If you're going to give me a portfolio that's a bunch of junk, you know, don't bother. So where do I start as a client? That's the practical question, Arjan. What?
Okay, well, it's a very good question, actually. So what we do, I give you an example. 3 years back, when we could still do large client events, we did a conference. We call it the Asia Summit, something we do every year for clients. And the title of that summit was A Better World. So it was a day and a half for our clients, and everything was around, in some way, a better world.
So that was the theme. That's the overall theme.
The overall theme, right? So for lunch, we served our clients Impossible Burgers, for example, which a lot of people, including myself, was the first time, and I had no idea it was not a real one, actually, but that aside. So what we did as part of that is that we educated our investment advisors and relationship managers to a certain extent in ESG, in the way we report the scores in our clients. And then we gave them an ESG scorecard. And for individual clients' portfolios. So the clients that were present at that event could have a separate discussion with their RM or their investment advisor, who would have their specific ESG scorecard and could talk about what does your current portfolio look like in terms of ESG, and then we could show your average scores on E, S, and G, the low scores on E, S, and G, et cetera, et cetera. So that's step one, and then obviously then clients can say, okay, you know what could be some potential steps to make improvements there, and I think there you have to link in to. You mentioned, you know, client can have a granddaughter. There you really also, because I think passion is important, and people can be very passionate about quality of water because they live next to the sea and they do beach cleanups, and every day there's more stuff. There can be people very passionate about the circular economy, or gender equality is another thing, right? So I think you need to try and find an area of passion of a client and then zoom in on that, because there's so many possibilities and things available. So we start with that, and we continue to do that with the ESG scorecard, and that's we find a very good starting point of starting that dialogue with clients.
I love. Sorry, I just try to quickly, because there's a lot they just shared from the global part, which Sylvia said, and then going down to the pillars. You're saying you try to match that with the client's passion.
Yeah.
What speaks to their heart? Exactly.
Because then you make it alive for them, right? And you make them interested. Yeah. So that really seems to work for us.
Fantastic.
Maybe just very briefly before you move on. I see another question on the Q&A.
Yes, I was going to say that. Arjan, what are some of the toughest obstacles you had to deal with in order to come this far in your career? An accomplished man here, right? How are you going to deal with this? This is not ESG related, but it could be. But go for it, Arjan.
No, that's what I was actually going to say, because I do give guest lectures sometimes at university, specifically on careers in wealth management. And I'm very passionate about that. So for this question, I would recommend the person to connect to me on LinkedIn, and I'm more than happy to one-on-one answer that, but it's not really ESG related.
Yes, thank you. If there are other questions, that was time for our Q&A right now. We welcome our participants. We've got 111. We've increased. It was 108 earlier on. So audiences, now is a good time to type in your questions, to ask about ESG related topics.
Carl, if I may, while we wait for question to be typed and so on, but I wanted to go back into one of the comments and question that you asked actually to Sylvia, right, in terms of time horizon and then on climate, etc., right? And if I can make a comment, because I think that's also important to mention it, but there's always a misconception that these are long-term risks, right? And therefore, like, what should I care, right? I'm only going to invest for 2-3 years max. I might not care. Well, so it's true that there's some physical risk that may be long-term, but even though, right, you can see there are some empirical examples across the globe that these are happening more frequently and more forceful, right? So I come from the southwest of France, so I can talk about the wild forest fires in my region, but more locally here, you can talk about the floods across Indonesia and Malaysia, right? So again, these are examples that this is happening now. And obviously that's a physical aspect, but there's a transition angle, right? And the reality as well is that as an investor, increasingly, and by large, now mostly everyone, are pricing this kind of risk when assessing assets. So the reality is that if you're not assessing this when you're pricing an asset, well, you may face some issues, right? So again, you may not face the issue when you buy, but when you're trying to sell, you may face these issues, right? So again, right, it's just I wanted to comment on this idea of time horizon and climate, and to debunk one of the myths, if I could.
Cedric, your point. This is something I totally forgot about. I'm glad you brought it in. Which is so. Look, when we look at a company and we are going to issue a stock price, but or a bond. We look at credit risk. We look at some underlying assets. Is there going to be something like an ESG risk index that companies need to be considered as a part of, earnings per share, credit worthiness? Is there going to be an ESG type thing that company, and is there a standard that we should be looking out for?
So that's already the case, right? So there's various different rating agencies and index providers, right? So I'll talk about my own church, as we say in French, so to speak, right? So I can talk about MSCI, but yes, so this is exactly how it's being used by investors, right? As a tool to assess how they can price a specific assets, right? And whether they want to invest or not. So what we're seeing, and that's quite interesting, right? What we see is that now this also impacts sustainable finance. So we're starting to see banks that are adjusting basically the interest, but also the price of specific financial vehicles based on the ESG characteristics of these assets. So basically, if I'm a corporate issuer, right, access to capital may be impacted by my ESG characteristics.
Oh, wow.
So in other words, by the MSCI ESG ratings. And so we've done a public blog, so it's ESG and the cost of capital. So it does show that companies with better ESG credentials tend to have a lower cost of debt and better cost of capital, right? Basically, they're better at attracting investors. So in short, it does already, right? So again, I'm talking about what we do, but there are some other scores, obviously, and indices in the world.
I mean, this is really cutting edge. I mean, I'm telling you, I go to church, and on Sundays, our church office is now saying to be environmentally friendly, please bring your own mugs for the coffee breaks, which is fascinating. I think somebody just questioned, but a comment. ESG funds prospectus should be available only electronically since we're advocating environmentally friendly funds. Love it. Here's a question for
this is an interesting one, right? You see, are you working with system integrators and investing in infrastructure products which offset carbon footprints?
Correct.
I think as an organization, we really actively trying to reduce energy consumption, less physical print. We have actually an annual sustainability report that is also available not just for employees, but also for the external world, where we look at specific things like this as well. But I mean, that's interesting, right? I give you an example of something we recently did as part of our private equity offering. So we work together with one of the larger Spanish oil majors in a huge project planting trees. This is in Spain. Now you'd say, why is that oil company interested? Because for them, they can get carbon credits. So we co-invested with that company.
This is a part of a private equity deal.
Correct. So obviously, how does that start making money? Obviously, it's by the trading in these carbon credits that this whole project generates. So for the oil company, it's really important to have that to offset their CO2 footprint. For our clients, it's interesting because it promised quite decent returns. And again, it could also be a passion for one of our clients to be actively involved in something that reduces CO2. So I hope this answers that question.
Thank you. Thank you. We welcome, we've got about another 10 minutes or so. Any other questions here from the audience? Happy to get it. I have sorry, I'm just looking into my screens here.
So Carl, just to add, right, I think we
Yes.
talk a lot on consumer behaviors, and to tie into the whole ESG concept and what some of the initiatives that are happening is a feedback loop. So what the consumer behavior will actually drive what's the demand for ESG products, and eventually what the businesses are selling too. So that is why it's important to change some of the consumer behaviors, also highlighted in the IPCC report recently. It's part of the equations to help to achieve that net zero down the road, to change that behavior from the consumer side. Maybe from the retail, it would be slightly easier than, from a business consumer perspective to change, for example, the manufacturing of cement or certain industrial products. But it just have to begin with everyone, I guess.
Thank you. And Sylvia, I just want to stay with you for a second. So it occurred to me that asset management firms like yourselves, you deal with both, retail clients and institutional clients, correct?
Yeah.
Are the institutional clients right now demanding and requiring, especially sovereign funds, that ESG is an important component of that consideration? Or, I mean, how is the different kind of market? We spent a lot of time talking about the 25-year-old, 35-year-old person who's going to inherit millions of dollars from the grandfather, right? But what about institutional? What is the flavor there?
Yeah, so we do see a divergence from where that institution is sitting at. Of course, I think the more developed markets, the EU, definitely way more advanced in terms of their request, in terms of the specific mandate requirements of how do we define ESG, what sort of ESG products they want to invest it in. There's a lot of restrictions or ideas or eligibility that's being scoped in from the more of an advanced or developed market clients or institutionals. Versus, I think we are seeing the trend to start to pick up a little bit from the Asia side. We are starting to see more requests, maybe from the thematic perspective, to be, the EM, emerging market green bond, or either to be product specific like green bond or the GSS bond space. A lot of time, I think the requests are coming through on that data specific disclosures and reporting as well. So we also have to collate from our investee companies on what is the impact measures. That's definitely a lot of focus currently happening from the European side.
That's a lot of work.
A lot of work, yes.
Because I mean, that's a lot. So this is fascinating because I think, Sylvia, I'll just conclude this for you. Then it sounds to me like it's not a trend; it's a journey, and there's a lot of things to be doing in this journey, and everybody knows that there's an ultimate destination that is set by some of these global organizations like United Nations. But at the same time, there's kind of this journey, the bottom up is also happening. Sylvia mentioned about the younger generation. Cedric's talking about the older generation in Europe, and Arjan's talking about the clients. At the end of the day, what are your values? What are your passions? What are you exposed to? What are your family circumstances? And in this journey that we're kind of driving along, more data points, more education, and more up-to-date understanding of what we're doing is important. I'm still very curious with my own personal portfolio. What is the what is my carbon credit score, or what is the scorecard that Arjan is talking about? And once I know that, how can I engage with my banker to start to navigate through all the different information that MSCI has provided, all the different products that's available, and how do I start to transition out from unfriendly things to something a little bit more proactive? Thank you so much, guys. There's no more questions, so we can wrap up. I do want to say to the audience here that we're going to share a screen right now, very soon, about the availability to pick up some more ideas and tips and toolboxes on ESG. But before I do that, I want to quickly thank all our panel speakers. Sylvia, thank you for kind of giving us your perspective, your views on the lenses of what Amundi is doing. Cedric with MSCI, thank you for the global perspective, as well as the transition of avoid bad things, risk management, and then moving forward. And our Arjan, of course, thank you very much about sharing the client's perspective. There is one last question here. What would be preferable to invest in? Equity that is green versus a green bond? I'm going to ask Sylvia because I think she's got both of these products. Sylvia, somebody's asking for investment advice. I'm not sure that this would be investment advice, but it's a good dialogue conversation. Green equity or green bond? What say you?
No, the correct response is depending on the client's preferences and risk tolerance. So I don't think we can just advise to go equity versus fixed income. Not as simple as that, though.
Yeah.
Thank you, everybody. Please take a look at this. We have an ESG learners pack, a demo pack. You can use this to scan. So Arjan, thank you very much. Cedric and Sylvia, thank you very much for your participation, your expertise, and your wisdom. We're very grateful. You've blessed all of us. You've blessed me, certainly. And everyone, feel free to reach out to Arjan if you want to understand his career. Thank you very much, everyone. And you guys can log out. I think there is a register to get your learner's deck here in the chat group as well, that you can click on as well. And we'll be happy to provide more information. This is a course that's provided by Amundi, by Momenta, and it's IBF approved. And if you're interested in more about an IBF approved program on ESG and how to, help your clients with those conversations, please reach out to us. Thank you very much, everyone. Arjan, Cedric, and Sylvia. Thank you. God bless you guys.
Bye.
Thank you.
Thank you very much, everybody.
Bye-bye.